two of them I've known for a long time, and one, Julia, only met very recently. Two are foresters. Julia's an ecologist. We're going to range around the world in this segment and come back to the UK. And the inspiration for this session was particularly because so many of the discussions I've been in on nature markets recently, people have said, but what about demand? Who's going to buy these things? How do we turn this into a market for something that people want? And so I thought it'd be interesting to look at some examples of other nature market mechanisms where this has worked, where there has been demand, where people have paid for something, good money for some nature benefit, and how, digging right back to the beginnings, they didn't just drop from the sky. How were these nature markets and the demand built? And what I think these three panelists all have in common is they're fundamentally practitioners, but who have a strong link into policy and academia and are really bridging that policy and practice and scholarship academia thing, which is really what I think we all need to be doing. And I've got you in the order that I've written down is Andrew, Julia, George. So I hope that will suit you. And I think there's a bit of sort of speak for 5 to 10 minutes. This has been interpreted differently, but we've got about 45 minutes for this. So the closer you are to 10 minutes, the less time there'll be for discussion. But I hope it will provoke lots of questions and discussion, and you can flag things that you don't have time to talk about, but you'd like somebody to ask about in the discussion, and if nobody else does, then I will. So Andrew, I've got up first. I met Andrew now over 10 years ago when he was a forester at Till Hill Forestry, and then we worked together at Comfort, and then he ran away to travel the world the week before lockdown started. So things took a slightly different turn, but he's been doing really interesting stuff since then. Went off to found his company in Overland with his business partner from WWF, and I thought it'd be great to hear about how that came about and how they developed a successful natural capital company. So Andrew, over to you, 5 to 10 minutes.
Okay, thanks very much, Ellen, and thanks for the impressive build-up, which I'll try and live up to. So I've got 5 or 10 minutes, so I'll do about 5 or 6 minutes on the project, and Ellen has sent me 3 questions, which I'll try to answer, and then do 3 minutes at the end on a kind of a wrap-up and some oversights. So as Ellen has said, I've set up a company called Innoverland in 2020, just before COVID, and in 2020, and we've got projects in Brazil and Ghana and hopefully in Uganda soon, but we'll see. And we've got a team of 24 people in Brazil, Ghana, Mexico, Spain, Portugal, England, and I'm the only one in Scotland, and I live in Scotland because I like living in Scotland, really. And there's a lot going on in Edinburgh, and Edinburgh is a real hub, a real international hub for carbon and forest restoration issues. So it's kind of a good place to be. As Anna said, my background is rich in forestry. I started off working as a countryside ranger originally, but then kind of fell into forestry. Forestry found me in my late 20s, and I worked in North Wales, where I'm from, Scotland, and then a lot internationally over the last 10 or 15 years. So I haven't got a PowerPoint. I'm just going to show you everything's on the website, and the data on the website is updated regularly. So that's easier for you to have that than a PowerPoint that will go out of date. So I'm just going to share just to show you where we are in Ghana. So Ghana is West Africa, and we're about halfway up Ghana. So it's this Accra, the capital's here, Kumasi, the main big city's in the middle there, and our project is here. This bottom bit is a eucalyptus plantation, which I'll tell you a bit more about in a minute. But where we're working is we're restoring areas up in the north here with natural forest restoration, and then we've got about 2,000 farms doing agroforestry mainly spread out along this road, which is this road runs along on top of a watershed, and most of the communities along here and most of the farmers are in this area. So great thing about Google, you just zoom in, so you can see this was nearly all open forest, well, open and closed canopy forest probably 50 years ago. Forest has been lost. Agriculture has been expanded, and this is the kind of area we're working in. So you can see some of these areas are starting to show already. We started planting in 2021. And what you can really see is this is our boundary, these two lines here, and then outside fire is a really big issue. So that was that. And then I'll show you, why can't I get onto that one there? So this is our main project website. And I'm just going to go through now and answer some of the questions that Eleanor set. So the project's about 15,000 hectares, or will be by the end of next year, and that's about 10,000 hectares of natural forest restoration and 5,000 hectares of agroforestry. And we're working, as I said, with about 2,000 small farmers on the agroforestry. There's a huge amount of numbers, which I will try not to use any more numbers or keep numbers to a minimum. If you want numbers, if you go on the report onto the website, and if you go onto the media, our annual report is on there, and you can download there and get all the numbers you could possibly want. The project was originally a very simple tree planting project, part of AZ's forest initiative when we started, and then it's evolved into a much larger scale, sort of wider environmental and social project, and the long-term funding will be via carbon credits using the Verra methodology. So the first question Ellen asked me was what nature is being restored, and that would not have been otherwise. So our focus at the moment is on restoring tree cover, and very much starting the restoration process and starting succession. And it's vital, I suppose part of that is vital to understand what issues we're trying to fix. And as I always say, with these, the area isn't in the state it's in due to a lack of tree planting, but due to a whole collection of complex, interconnected social economic issues. And we can't fix all of them, but we need to understand how they work and ones we can influence, and understand where, if we do tree planting, where it's going to be effective. So trees were initially removed in this area for timber, started under colonial times, and then more recently there's a lot of pressure on for fuel. And you need to understand why trees aren't regenerating. It's because of the land, as you can see on Google, the land's used for farming, and we have a lot of wildfires, none of which are really wild. They're all started, and then up to a lesser degree cattle. So we need to understand, work with local communities around farming, and then particularly on wildfire management. It's a big focus of what we do. We do a lot of wildfire training. If we don't get that right, then we can plant as many trees as we want. They're not going to survive. So Ellen, the second question was around market mechanism, who pays for what and how is it measured. So we've been working with AstraZeneca since day one. We were introduced by an intermediary. It's slightly different to other carbon projects, and we've tried to very much focus on quality projects and delivering multiple benefits to multiple people. Measurement, as I say, we're working through Verra. We're going to be validated and verified in September, touch wood. And in terms of what we measure, I think this is a key. It's not. I don't think it's a key. It's a massive issue, and we often measure the easy things, which aren't always the right things to measure. So we can measure things like numbers of trees planted, survival rates, growth rates. A key issue here is fire. So how can we measure fire frequency and intensity? And is our training around wildfire management having an impact? I was introduced to NDVI and NDMI, normalized difference vegetation index and moisture index. That's free available stuff. If you want to have a look at that online, it's really interesting. And if we're getting what we're getting, if we do it right, then those things should improve early, and that should be a good indicator. When we're talking about the market, it's easy to focus on the market around carbon, and carbon is a very wide carbon market, but also we need to think about the market for the farmers we work with and the landowners. We're planting a lot of cashew and mango with the farmers, So we need to understand the market for the cashew and mango. If that doesn't work, then the project doesn't work for the farmers around that market. As you all know, there's a lot of noise in carbon markets and a lot of confusion around carbon finance, carbon accounting, carbon offsetting, and that gets very muddled. And sometimes it's very hard to see through all of that. Particularly, a lot of what's published in the media, mainstream media, is I think, very poorly written. And when we're talking about the big corporates often aren't completely clear on what they want, and they're very cautious and nervous. There's demand there, but as I say, there's a lot of caution. Sorry, just rattling through quite fast, trying to keep to time. How is demand created, and what motivates people to put their hand in their pockets was the third question. So demand is a bit like markets. You've got to have a demand from the farmers and the landowners as well. And the easy answer from a corporate point of view, I guess, is science-based targets, CDP, EcoVadis, those kinds of voluntary regulations. But I think there is a wider increasing corporate focus on carbon for a wider range of benefits and that wider social impact and environmental impact. And I think rather than looking at these projects as a simple kind of buying and selling trading thing, they're really joint ventures. And the joint ventures between all the partners involved. So we're lucky that AstraZeneca are putting in cash and support in terms of their investment, but then the farmers we work with are also putting in their time and their land. So it is really thinking about what that demand is and that wider demand, and the demand for people like me to do project development. It's got to be worthwhile for us to do it and worth the hassle, and demand for landowners to participate when they're getting locked into very long-term and quite uncertain contracts sometimes, and as I say, demand for local farmers. So my sort of three takeaways in all of this is it's very much about people. You've got to have get the people involved, and it's about a long-term relationships between all the parties. We're looking for 20, 30-year relationships, and that requires a lot of trust and takes time to build, which can be difficult. You need resilient projects. And I always say focus on good projects that are resilient and create the most value for the most people. Additionality sometimes becomes a problem, but I think you can work around that. But all these projects will have challenges, things will go wrong, and you need that resilience to kind of keep things moving forward. And then finally, my third one is always about transparency. And we talked about LiDAR, remote sensing, bioacoustics, NDVI. Using all these tools, you can build up that trust, and you can strengthen that relationship by using those tools and working with universities. We're sponsoring a PhD in Kumasi at Kwame Nkrumah University, and we've also had a relationship now with a PhD in Edinburgh University. So building up this trust and building up for years. We try to be as transparent as possible, but yeah, happy to answer any questions.
Fantastic. Thank you very much, Andrew. I'm going to keep all the questions to the end just so we know how much time we got, but do start putting them in the chat. Andrew, perhaps you could put your web address into the chat so that people can seamlessly click it.
Okay.
And what I like about this model and those examples that we could have used from the UK as well, doing this is using the markets that we've got, the markets for carbon and the markets for production that we've got to deliver what we really want to do, which is restore nature and deliver social benefit, which is perhaps not a novel insight, but I think in Overland have been doing it in a really creative and good way that I've found very inspiring as I've followed your development over the years. So I would commend it to everyone's notice. And then next up, Julia is going to talk about a different approach. It's more around regulation. Julia is a research associate at Edinburgh University and is working on the Natural Environment Research Council's Integrating Finance and Biodiversity Research Programme. But I'm not sure if what you're talking about relates closely to that or if it's from your previous experience. But when we had a wee chat about this at Edinburgh University, I thought it sounded really interesting and something that I thought I was interested to hear, and I hope you all will be as well. So over to you, Julia.
Thanks, Eleanor. Yeah, so we're going to shift gears a little bit from talking, I think, from that very specific project perspective to talking at a programmatic perspective. So today I'm going to talk about nature markets in the States. There's a range of markets, and I have 5 to 10 minutes. So the focus today is really going to be on wetland and stream markets, in particular, the wetland and stream markets that are under the Clean Water Act. So the Clean Water Act came about in the 1970s, and this program specifically deals with regulating dredge and fill activities within waters. So for those of you who are big fans of Marvel comics and origin stories, this program is really the origin story for the mitigation hierarchy. So what we are talking about here is offset markets. So people are engaging in the marketplace in purchasing credits only after they've demonstrated that they've avoided and minimized their impacts to the extent practicable. So there's really 3 mechanisms for offsets, just really briefly. So if someone needs to offset an impact, they can do it themselves on their own property. So that's called permitting responsible mitigation. And then there's also in lieu fee programs where someone effectively pays a fee, and then either a government entity or ENGO then creates a restoration project on the back end of that. And then there's mitigation banking, which is, I think, probably kind of what we traditionally think of as these markets, which is basically that you have these off-site sites that develop restoration projects and then generate credits and then sell those credits to the people that require offsets for their permitted impacts under the Clean Water Act. So within that, there is a clear policy preference in the regulations for mitigation banks, so purchasing credits from mitigation banks or investing or purchasing in lieu fee credits over permitting responsible mitigation. And what that really does is it incentivizes the development of large-scale wetland and stream restoration projects. So question 1, what nature is being restored? We really are talking about wetland and stream ecosystems with a focus on kind of holistic ecosystem integrity. These range in size. So I think there was one study in Illinois of the mitigation marketplace in Illinois, and you're talking about wetland projects that range from about 10 to 38 hectares within that study. Stream projects, similarly, they can be quite small. So they can range from less than a mile, but then they can also be much larger and encompass, large river and even tributary networks within kind of a broader site. I think that there's an example from North Carolina where the mitigation site encompasses about 28 miles of stream corridor operation. So they can be quite significant projects. I want to share, let's see if I can get this up easily here. Where's my window? There we go. Right. Okay, so here we go. All right, so I just wanted to give you guys a sense of the scale of when we talk about stream and wetland markets in the States. So this is a slide from April of last year, put together by the Institute for Water Resources. So we have over 1,500 banks that are currently active in the States, and then over 850 in lieu fee sites, and these stretch across 47 states. This is a very large market. So I think when you look at annual revenues, it's about a $3.5 billion industry, and it supports, almost 20,000 restoration professionals. When you expand that economic analysis and you factor in kind of your supply chain and your spillover, you're talking about a $9.6 billion industry and over 50,000 jobs. So it is quite a significant scale of a market in the States. But then, so the mechanics of it, how does this work? It doesn't really function as a single market. So each bank and in lieu fee site operates within what's called a service area. And so these are often based on kind of catchment boundaries. Sometimes you'll see that, they're at a state boundary and a catchment boundary. And effectively, a project has to be within a bank's service area to purchase credits. So there's no credit sales allowed out with this area. And so what this means is that your demand for mitigation banking is really locally driven, right? So your distribution of banks that you see here on this slide is largely driven by demand for credits and economic viability within service areas. So, when mitigation bankers are looking at, developing a bank site and looking at the size of the service area that they might need to accommodate their project, they're looking at kind of your historical and your projected development trends, things that are going to require Clean Water Act permits, and also likely future credit demands. So they might look at things like longer term infrastructure planning, looking at some of these other bigger projects that might be occurring within the space that could kind of purchase a large chunk of credits from an emerging mitigation bank site. So who pays for what? So bank development can be really time and resource intensive, and it will have a lot of large upfront costs. So oftentimes you'll have investors and institutional investors who will put up this capital in order to support the banks, and then they will kind of receive their returns once credits begin to be released. Oftentimes you'll also see mitigation providers or bank developers themselves, once they receive sufficient credit sales from previous mitigation sites, they'll then reinvest that into a new mitigation bank site, either within kind of the same region or elsewhere in the country. So you'll have credit release schedules. And so basically, a lot of times you'll get upfront credit sales at the time that the mitigation bank instrument or the project is approved, which they can then sell, and that starts bringing in revenues from the project. And then they'll have credit release schedules that kind of incrementally release additional credits over time. But importantly, there's always a portion of credits that are held until a project achieves its ecological performance standards, which we'll get to in a minute. In lieu fees are structured a little bit differently. Like I said, they're restricted to governments and NGO entities. They have less upfront costs, so they still kind of have to put together the in lieu fee program and compensation planning framework upfront, but then their cash flow is different because they're not initiating projects until after they've received fees. And then there's also, I think, when we talk about costs, there is a really significant resource investment that the resource agencies make, both at the state and federal level within this program. So there's well-trained staff across multiple agencies, often who have a lot of responsibilities other than mitigation banking, but they're engaging with each mitigation bank and in lieu fee development to ensure that the project aligns with these 12 required elements, which are required for all compensation or offset plans. And so this kind of rolls into this idea of what's measured. So these are kind of the national overarching standards that apply to all the mitigation sites everywhere within the country. And when we talk about what's measured, there is kind of this emphasis that there is the same information that's collected before and after the project. So there's baseline information required and then also monitoring requirements. But then as to what is specifically measured, this is very bank specific or site specific. So your monitoring requirements are going to be linked to your performance standards, and these vary by project and are based on your site specific objectives. So this kind of takes into account, the local context, regional reference expectations, and what's really achievable at a site. So this is all really tailored to each particular project. But then also, your measurements are going to inform credit calculations. And so here you can kind of see this first column. Credits are basically a cocktail of, a couple different elements here, right? So credits will be informed by a function or condition assessment, a unit of measure, which is either kind of area in wetlands or length in streams, and then you have other multipliers or adjustment factors that deal with risk, priority resources, and things like that. And effectively, your baseline and monitoring data is going to inform both how many credits are generated at a site, but then it's also going to inform whether those credits will be able to be released. So in other words, the data is used both to determine how many credits are generated and also whether a bank has achieved its objectives, and thus all credits at the bank can be released for safe. So just really quickly, lastly, what drives demand? The regulations drive demand. So this is not a program that's dependent on goodwill or voluntary commitments. The demand for credits is driven by regulatory requirements to offset or compensate for unavoidable impacts to waters. So this creates certainty for bankers and investors. And I think the policy preference within the regulations for these offsite mechanisms and larger scale mechanisms also really supports the demand within the market, and that's where it comes from. So, when you talk to people who are mitigation bankers and you ask them, well, what's your pipeline of projects? Well, the pipelines are all based on this consistent regulatory requirement, which is going to drive entities to need to purchase credits. So I will I will leave that there for now, and encourage, hopefully this encourages good discussion.
Fantastic, thank you. It's like biodiversity net gain on speed. And I think yeah, I hope that's got people's minds whirring. I was late coming back in because I was noting down a question, which hopefully I won't have time to ask later because there'll be too many other ones. Thank you very much. I can see questions coming in, but before that we'll move straight on to George, who to come back home to the UK. This is a historical one, so I said to George, and I think Ek is here as well. So I don't know if you want to do a double act, but they're directors of Forest Carbon, which was right in at the beginning of the Woodland Carbon Code. And I came a little bit late to the Woodland Carbon Code. It kind of started by the time I got here, but I was my recollection is that yeah, it didn't drop from the sky. It wasn't the functioning, flourishing market that it's becoming now. There was a lot of work on both the policy and market side to bring it about, and I thought it would be really interesting to remind ourselves, or find out if we weren't, if we weren't there at the time, how that market came about and what lessons we could learn for wider nature markets. So, George.
Eleanor, thank you. Thanks for the introduction. I'm just going to try and work out how to share my slides. I'm on a little laptop without multiple screens, so if you just bear with me for 2 seconds, hopefully I can pull this off. 2 seconds. Is that all showing clearly? You can see my slides?
Yeah, perfect.
Trying to remove the faces from the middle of the slide. Bro, I will crack on. Look, Eleanor, firstly, thank you so much for the opportunity to speak today. Many of you will be familiar with the Woodland Carbon Code, so I would go into the specifics of it, but more take you through kind of 19 years of kind of history of kind of where it came from, how the market's evolved, and then maybe touch on some reflections, which Eleanor asked me to do. I suppose it comes in the same week that world record-breaking prices for woodland carbon credits is being reported at the London Climate Week. So I think a good opportunity to maybe pedal back 19 years from where it's come from, and maybe interesting to take some reflections on some of those announcements that are coming through just over the last week. So where did Forest Carbon come from? It was really created through a handshake on the platform at Paddington Tube Station. James Hepburn Scott, my father, and Steve Pryor were the 2 co-founders of the business, and are still involved in varying capacities. At that time, there was no domestic carbon market in operation in the UK. And really they came together and pioneered the concept of carbon finance, kind of woodland creation in the UK. That was triggered early on through some kind of pilot projects. Some early projects were delivered with some financial support from Marks and Spencer, and across a couple of projects in the Scottish Borders, and that was back in that same year in 2006 when we were founded. Then through into kind of 2007, 2008, working alongside organisations like Confor, we made a case to the Forestry Commission to take on the mantle to develop, manage, and own ultimately a woodland carbon standard. So that led to kind of 3 years or so of development work that ultimately led to the formal launch of the Woodland Carbon Code in July 2011. Then towards the end of that year, Forest Carbon piloted a number of projects through the Woodland Carbon Code methodology, which resulted in the first project being validated against the Woodland Carbon Code in November of that year at Milton and Mallows up in Aberdeenshire, which is a shot of the then Climate Minister visiting the site on that announcement. I won't delve into all these milestones, but this just gives you a little bit of a kind of history of some of the kind of key developmental milestones of the Woodland Carbon Code. It misses out many additional ones, but this picks off some of the kind of key ones. There'll be mentioned here a couple of version changes. It disguises the fact that there's probably approaching version 8, I think, which is out for consultation. It's referred to as version 3. There are various 1.1, 2.1, 2.2 versions in amongst that as well. So it's actually I think it's going to be the 8th iteration of the code, which is we're anticipating is going to be published later on this year. It's out for consultation at the moment, and that reflects a huge amount of work by the Scottish Forestry team, or the Woodland Carbon Code team that work under the auspices of Scottish Forestry, who worked incredibly hard, each iteration of the standard, and also with wider input from stakeholders to develop and evolve the standard that we now going to use day to day. Another important milestone to pick out, 2021, I'm going to give you a run of acronyms here. The International Carbon Reduction and Offset Alliance, ICROA, formally endorsed the Woodland Carbon Code in 2021, which was a very positive signal for the market at that time, and critical milestone for the Woodland Carbon Code. Many of you will be familiar with the distinction between PIUs and WCUs, but I'm going to touch on those in some following slides. Just to pause on that briefly, PIUs represent 1 tonne of CO2 equivalent of future sequestration. WCUs represent delivered sequestration. There are limitations on what you can do with PIUs until they become WCUs. In essence, you can't use PIUs for offsetting until they become WCUs. There's a whole load of permutations in there, which I won't delve into, but that's just for clarity, in the unlikely event anyone was unsure of the distinction. I wanted to touch on the kind of evolution of the demand side. We were founded in 2006, as mentioned, and we probably experienced between those early years up until 2019 that the market was almost exclusively driven by corporates looking to make what we refer to as kind of CSR type statements. Typically along the lines of kind of tree planting sponsorship. With the launch of the Woodland Carbon Code, that provided a kind of quality assurance stamp that provided a reassurance to businesses to support projects, but they weren't looking ultimately to make claims against specific tons of CO2 equivalent that were going to be used against residual emissions. That really has only been a more recent phenomenon through the advent of net zero targets being set by businesses, and we saw a rush of those in the 2019, 2020, which really gave rise to a significant uptick in inquiries hitting forest carbon, and at the same time, I suppose that triggered to some degree a kind of wider awakening of the opportunity amongst the land use, land owning, land management sector and advisors. But up until that point, it'd been relatively small, relatively immature market. I suppose on the back of that spike of interest from those kind of net zero buyers, we then began to see institutional investors beginning to show some interest in the market. And I think we've had, as many will have, had around this kind of wider table today, had conversations with institutional investors who've shown some interest. We've seen the likes of Finance Earth working with Federated Hermes with some seed funding from DEFRA, struggling to raise funding, and that Federated Hermes has fallen by the wayside. Finance Earth has now got an opportunity to try again. We're aware of the likes of Aberdeen trying to raise some money for a natural capital fund, and we've seen Rebalance Earth recently making announcements of having raised money from West Yorkshire Pension Fund. So all will be taking slightly different approaches for how to deploy that money in the market and ultimately how to raise it. But I think there will be a really critical role for institutional investors. I'll talk more about the relevance of the demand and ensuring we don't take our eye off that. And finally, insetters. Look, this is a whole another kind of session we could dedicate to this, but we're beginning to see some interest from those looking to kind of use credits as some form of inset. High profile case might be Aviva buying 50,000 acres in the Cairngorms National Park, through to Nestle, Tesco's, Co-op and others looking to provide some funding support at a farm level. But those are kind of forward camps, loosely kind of demand side actors, but there are permutations, blends, grey areas across all of those. But it provides some kind of distinct kind of groups there. We're often asked about who the buyers are, where they're coming from. It's very hard to generalise now. It's across a whole range of sectors, very broad range of sectors. But what we've maybe seen over the last 5 years, some more dominant sectors might be skewed slightly by some larger scale transactions that we've been involved with. But this is more from a forest carbon perspective rather than the market as a whole. But maybe somewhere in the order of 50% come from business consultancy, energy and finance sectors. I don't quite know how that translates through to kind of wider market activity, but some of the names there are some of these organisations we work with, driven by a mix of kind of net zero, SBT aligned kind of commitments and use of offsets against longer term residual emissions, alongside those looking to do this still as a kind of CSR sponsorship type activity in the case of Gatehouse Bank. Quickly touch on pricing. We saw quite a steep rise from those early years in 2006 up to 2020, and then further rises from that point up until 2023 through to 2024. We've seen some settling down in terms of the kind of the growth rates kind of year on year. Clearly, there are always going to be some outlying deals being made and announcements being made that might skew maybe wider perception of where values are. But I think from our experience and out of some of the competitors who are transacting credits in the market, that there's maybe been a bit of a softening of appetite, a bit of a slowing. I wouldn't necessarily see prices have come back, but more, those growth rates have slowed somewhat. Sales today of those PRUs, approaching 3.5 million PRUs, could have recognised that's over 14 years now. It's actually a relatively small amount per annum. The green bars here show at volumes over the last 5 years that have been around, of reported data, around 250 to 350 PRUs of reported data. There's probably more than what's ultimately been reported, but it gives you some insight into the kind of level of trades happening. Just touching on the kind of land mass we're talking about in respect of kind of engagement with the Woodland Carbon Code. I've used kind of hectares here. You could look at tons, numbers of projects. I've used hectares here. Probably what's interesting to touch on, I know this is maybe more Scottish-centric call, but what's really important to focus on is there's almost there's 9,000 hectares of undeveloped projects in England across 700 projects. That averages 13 hectares average size of project in England under development, and that's really right at the kind of threshold of where we feel projects are probably viable from a certification perspective. Something to bear in mind with other developing markets for carbon and nature in due course in terms of kind of that challenge of certification fees. And the equivalent figure for Scotland is 100 hectares, where maybe that viability is less challenged. But if we want to see more woodland creation in England, how you unlock small projects is going to be critical, and how they can participate in the carbon market is going to be pretty vital. We're going to jump onto the next slide. Look, Ross stole my thunder a bit on a number of these things, and actually will help speed me up. So I'll try and delve into the ones that he didn't cover off. Environmental reporting guidelines, specifically the kind of carbon reporting guidance, originally published in 2013, then updated in 2016, then 2019, was really all about what businesses were required to report their carbon emissions in their company accounts. Within that, those guidelines, there was an endorsement essentially by government of using woodland carbon units and peatland carbon units to net off your gross emissions in your company accounts, which was, I suppose, the first big kind of major, this is a good thing to use kind of support from UK government. We obviously, touched on UK ETS, the BSI work. A woodland carbon guarantee worth mentioning. This was focused on England off the back of the budget in autumn 2018, £50 million ring fenced to eventually provide an option to English woodland creation projects to secure a contract from government that would give you the option to sell verified credits to government unless you found another market elsewhere. It's been reasonably successful, fits and starts. I think it represents about 124 projects. Starting prices about 17 to 25 pounds a tonne, kind of index linked. Probably not made as much impact as many would have maybe hoped and expected, but maybe that's because the wider private market kind of leapt ahead a bit at the same time as that being launched. The DESNZ consultation Ross has mentioned, standardised carbon sales contracts coming through one of the Ferns projects, really valuable work, and biodiversity methodology kind of add-on that the Woodland Carbon Code and Peatland Code are developing that I don't know, may or may not have some follow-on funding to develop that biodiversity methodology, so we'll await the announcements. Final bullet, there's a brief mention of a carbon offtake fund in the spending review this year from UK government. It was in there and then out there on the same day in the press release. probably shouldn't have been in there. Someone made a mistake, but there may be an announcement to come on that. But just to give you a sample of what's maybe happening, maybe coming down the tracks in due course. On the kind of global sense, here's something, I think Ross touched on, VCMI in terms of the kind of claims code. What's really critical, I think, for the Woodland Carbon Code, Peatland Code, is the ICVCM core carbon principles. Peatland Code have put in an application. It hasn't necessarily been rejected, but they've been given some homework to do to try and kind of be eligible to maybe shift things around. Woodland Carbon Code have yet to apply, but have the intention to do so. This summer. We're hearing more and more from corporates that they will only buy from projects that have been approved under standards that are CCP approved. The likes of Meta, Microsoft, Salesforce had a large tender out, RFP out earlier this year, and they made that stipulation in there. I'm not saying that represents the whole market, but we feel as a market participant it's pretty critical advancement for the Woodland Carbon Code and Peatland Code to secure that endorsement. Final bit is Science-Based Targets Initiative. Many of you are familiar with that. There's a draft out at the moment. It points towards potentially reopening the opportunity for those corporates kind of captured under that, or using it to use offsets on their journey to their net zero point, rather than only using offsets post 2040, 2045, whatever that kind of net zero milestone is. That could again open up more demand for UK projects, whilst acknowledging that trees in the UK are relatively slow growing, and there's maybe going to be limited availability of WCUs to support some of those corporates on their journey. So something to be mindful of. I'm conscious of time. These are some reflections that we'll maybe pick up on in the Q&A, but all to say, don't think about small projects in designing maybe new emerging biodiversity methodologies, standards. Find a way for small projects to participate. My same plea goes for carbon markets. Streamline processes as much as possible, how you work with auditors, project developers, the standards, how you interact. Streamline that as much as possible. It's a big resource burden on the sector and our world and the carbon market at the moment. AI, remote sensing is going to play a big role. Embrace that as much as you can. Price transparency vital to help encourage more investors into the market. I slightly worry there's been too much focus and tension with getting the investors in and not thinking about the demand side, which Eleanor referenced. Investors need to see that there will be demand there for these credits in order to make a commitment to invest. I worry that there hasn't been enough attention about ultimately who's going to buy these credits, when, what are they going to pay for them, and what are going to be the drivers to buy them. And look, finally, don't let the perfect become the enemy of good. I hear that on every single panel now about carbon markets, every single time. But I do fear we're lurching very quickly towards this desire for perfection, and I have worries about that stifling action on the ground. Getting that right balance is really tricky, but those are some of my reflections. I'll stop there and hand back to Eleanor.
Brilliant. Thank you very much. I could see the chat flowing, questions and answers. That was more than any of us will be able to get our heads around in the next 5 minutes. And I think rather than picking out things from the chat, because the discussion's been going, if you've got a question, put hands up time. If you've got a question for one of the speakers, or you've got a reflection that you'd like to jump in, we've just got just a few minutes. And I hope some of you have been, Andrew.
I was just going to reflect to what George said, the cost of doing this. We've got small carbon projects in Brazil, working with indigenous community groups and quilombola groups, and we're trying all sorts of ways to try and get the carbon market to work. But it's not. We're trying a thing called Open Forest Protocol. But yeah, the upfront costs are huge, and the money that's now getting diverted into consultants and auditors and mechanisms is just money that's being taken away from smaller projects.
Yeah, I gave a presentation recently on nature markets called something like the Wild West and the gravy train, being the two things that are hard to, or maybe the two things that you can end up with, the two dangers of. But and that was a question that occurred to me for Julia, is what drove the regulatory requirements that are driving the market? Was it directly, well, there's something bad happening over here, so we need to do something about it, or was it a kind of wider sense of big national issues? We've got floodings, we've got drought, we've got rivers degrading, and here's an opportunity to create a mechanism that will tackle some of those big issues, or maybe a bit of both.
Yeah, I mean, there's a long program history. I mean, the market-based approach to kind of mitigation in the States came about in the Reagan era. And then you saw kind of really small uptake. It was mostly, like your state Department of Transportations, who knew what their kind of longer term infrastructure planning was going to be. And they would start building mitigation banks to deal with all of their offsets in one single site, as opposed to doing them ad hoc. And then, you saw the emergence of policies kind of in the 90s for how to handle mitigation banking and these offsets. And then there was a really kind of big research effort in the turn of the millennium, I guess, where they looked at kind of, well, is this working? Is this actually delivering what we want on the ground? And there was a big national review and a long list of policy recommendations, or a long list of recommendations that came forward for how to improve the policy. And so that's where you see kind of that list of 12 requirements that I listed came about from that, which basically said, what we really need to do is focus on, the delivery of projects, right? So we need to make sure that projects are delivering administratively, they're performing administratively, and they're performing and delivering their ecological outcomes. And so that's kind of where that came from. And that was the focus on the regulations, creating this set of standards that all projects within the industry have to adhere to. And so that was kind of the genesis of that, really.
Oh, thank you. I can't see any hands up, but I did think Peter's question to Andrew in the chat was a really pertinent one, especially for a lot of the Ferns projects that I hear are being funded, which have a real farm cluster theme, getting lots of small landowners to work together, and this fits in with the ecosystem restoration code. So Andrew, would you just, I see you've answered it in the chat, but how do you tackle the challenge of getting lots of small landowners to work together? Yeah,
it's a major issue, and I think some of it you've got to accept that stuff, you've got to kind of have a tolerance a bit of kind of 20-25% isn't going to work, and not try and not worry too much about that. But as I said in the chat, we have a network of lead farmers, so at least one person in each community, and they are our main interface, and they are our main kind of local support mechanism. And then we recruited some more project assistants this year to help with that. But we need to go and map every farm, so it needs someone. We use mobile map. I can't remember the name of the mapping. One of the mapping programs on a mobile phone that we walk around every site. And we have a major challenge then that farmers often then don't plant where they said they were going to plant, they plant somewhere else. And then we have to go and revisit and make sure they're there and remap it. And if when we start doing carbon payments next year, hopefully, if everything works, that's going to need a lot more regular visiting to make sure everything's there. And obviously we can start, once the trees are bigger, we can use remote sensing and drones and everything else. But when we're planting 30-40 centimeter whips, you've got to go and walk, and you've got to go and see them. So that is a major challenge for us.
We are about to run out of time. I've got other questions I could ask, and I'm sure you do, but I know all the speakers are on LinkedIn. They're on the internet in various places. If you're in Edinburgh, you will run into them at things. So do go and find them and stay in touch with them, because one thing I know about them is they do like talking about what they're doing. They're very passionate about it, and they're all developing works in progress. So stories to keep following. Sally, next steps and actions. We've mentioned the coming up field day, but are there any other announcements?
Yeah, I've been taking notes vigorously in the background, and also I've made a recording just of the markets discussion. So I'll upload that and circulate the notes from today's meeting and hyperlink all the things that Ross and Stuart were also discussing earlier on. And then thoughts on a third meeting. I know that we've been aiming to do 2 to 3 a year, but I think potentially with so many moving parts and also the field trip, it might be good maybe in October to get together again. So that'll be good. And that's kind of all from me. I can, send through the notes and circulate everything later this afternoon.
Great. Yes. I think, we haven't thought between us ahead beyond the field trip yet, but I think a meeting in October would be good, because it does feel like everything's moving really fast, and exciting times. So I can see the chat's still going, and hopefully that'll be still available after the call. And thank you all very much for coming, and I look forward to seeing you in person or at a future one of these or elsewhere very soon. And enjoy the rest of the day.
Thanks, Eleanor. Cheers.
Great. Thanks all.
Eleanor.
Thanks, Eleanor.
Thanks, bye.